Hi everyone, this is Rob Roy of Elliott Options, and welcome to this edition of TradeFinder, our free educational publication designed to take you a little bit more in depth into the technical analysis system that we utilize to identify trading opportunities and then qualify those that are worthy to be sent out to our subscribers as alerts. Got a couple interesting ones to look at. Let's take a look. The first trade I'd like to take a look at this week is trade ID number 169 in our, as you can see, volatility strategy, which is a strangle, likely a triangle formation. That's what dominates the majority of our alerts that go into the volatility strategy. So it's kind of a non-directional but directional strategy at the same time. Non-directional in that we're not picking the direction, but directional in that the profit is realized from a directional move from a particular pattern. Quite often it's a triangle pattern. So if we take a look at LNC, you can see that we entered on January 22nd, closed it on January 27th, so 4 days in the trade, returning just under 27%. So if we take a look at the particulars here, on the entry date, you can see that we had a very nicely formed symmetrical triangle. And if we take a look actually at the close that occurred that day, you'll see that we closed with a doji. Well, you can't really get much better than that on the entry. In other words, you have a beautiful symmetrical triangle with a doji at the end of it, meaning that there's indecision, and quite often when you have a doji at the point of a triangle, it's going to break out the next day, and that's exactly what happened in this case. So watch what happened. Boom, boom, boom. There we go, straight to the downside in just a few days. And looking at the moving averages, we got just a bit oversold on the short term. So we get that real quick breakdown, and we have a gap right here that needs to be filled, and we have separation from where the stock's trading and the 10-day moving average. Pretty good chance that we're going to see at least a little bit of a retracement to fill this gap here. So the rules that are follow when you have a breakout like this, especially one that occurs this quick, is you can take one leg off and hold the other leg as a bit of a lottery ticket, because by the rules of triangles, once the breakout occurs at some point in time, that breakout move is going to get retraced and you're going to move back to the point of the breakout. But sometimes that can be weeks or even months later. So there's no rhyme or reason as to how long that's going to take. So the rules that I follow are, if you get the breakout and you can get 30 cents is kind of the decision, but if you can get at least 35 cents out of the other option, in this case we had a downside breakout, so obviously the profit's in the put side. If you can get at least 35 cents out of the call option, then you go ahead and you take that and take the entire thing off. If it's less than 30 to 35 cents, then you go ahead and hold it as a lottery ticket and see if you get a retracement back to the upside. Well, as you saw, this actually was an April trade, and so we're in January. We had April trade, so there's a lot of time left in this position. So even on this downside breakout, there was still 35 to 40 cents minimum in the call option, so made the decision to go ahead and close the entire position rather than holding one side of it. Well, as you know, not all rules work 100% of the time, and yeah, we were looking for a retracement. There it was the next day, and you're like, oh, okay, we filled the gap. That was great. Good thing that we took the position off, because remember, the profit was from the puts with the downside breakout, and then lo and behold, boom, boom, boom. We go through a little bit of a consolidation and then right back, and there's that retracement back to the point of the triangle that I was talking about. So in this case, had we held the call option, just closed the put off on the downward move, then we would have regained a nice amount of premium in the call, and we would have generated far more than the 26.39% that we, again, 4 days, 26% is not bad. But if you don't follow a set of rules, you really have no chance. But I just wanted to show you, we show that quite often our timing is really spot on the exits, but Nothing works 100% of the time, so want to be fair and show the other side of the coin at times. But you can't be upset with a nice profit in 4 days. It just shows that, every now and then certain things like this happen. The retracement was not a surprise. We knew that was going to happen. The speed of the retracement was what was the surprise. And, if we had a crystal ball and we knew that, obviously we could have maximized the gain. But the value was there in the calls, so we went ahead and closed them out rather than hold them. But we have had times where we've held one option as a bit of a lottery ticket, and then we get this kind of retracement, and it does add value to the overall position. So good learning situation there on LNC. Next trade I wanted to show you is another interesting scenario here, which is on Visa, trade ID number 173. But before we look at that, I actually wanted to take you down to show that we had another trade on Visa, which was trade 163. That was an entry on January 9th and exited on January 15th, returning almost 43% in 5 days. So a very nice trade there. So let's take a look at this one. With the entry on January 9th, you can see that we had a nice wave 3 move to the upside. We had our target price, and then we go back. Remember, we entered this on January 9th. So let's take a look at Visa and go back to January 9th, the date that we entered that position, which was here. And then we get the move to the upside. Boom, boom, boom. And there was our big move to the upside, which gave us our nice return, again, just under 43% in 5 days. Now, as I mentioned in the LNC situation, we're usually pretty good about our exits, picking when they're going to move. Well, this time we did get just a little bit more of an upward move. And you go back and say, oh, well, if you'd held it a couple more days, well, if we were overbought and we just made the decision to take our gain, can't be upset with 43% in 5 days. But watch what happened. And it goes through and creates this triangle formation. So we're keeping an eye on this. And as we go back to the trade listing and look at trade ID number 173, which was the newer position, we entered that one on February 10th. So taking a look, here's our chart, and you'll see, I'll show it to you on the live chart here in a second, but there was a formation following that big run up. It went through a symmetrical triangle formation, meaning that it was creating a complex wave 3. This happens. And so when we have one that does this, we keep an eye on it. So there's the formation of the triangle, and there's where the entry was, and then boom, 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 we get another big upward breakout move, and there was the exit. And you can see from our trade listing on this one exiting on the 14th, so 3 days in this trade, just under 4 trading days, another 40%. But think about this. It's interesting here. So this is 2 trades on Visa, both of them less than 5 days, where we returned greater than 40% on the position. But the really interesting thing about this is here was our exit on the first position, right? And then you see we had a couple more days to the upside. Well, it consolidated that, formed the triangle. And normally when you see a triangle formation like this, you're going to go ahead and put on one of the strangles like we showed you with the LNC position, where we're buying an out-of-the-money call and an out-of-the-money put. But creating a complex 3-wave, the expectation was for it to continue to move to the upside. Our indicators, the confirming indicators that we look at, were showing that there was a lot of strength to the upside. So we made the rare decision to go ahead and just go long rather than utilizing the strangle. And it's almost like we captured the move that we had missed the first time. Isn't that interesting? Because there's where we got out. We could have gone higher here. So we get in here, and then we get this move to the upside. So now there's that other 40% or so that we could have gained had we held the original call options a little bit longer. So sometimes if you just keep watching it, you get a second opportunity to come back And that's the way this one worked out. So I thought that was an interesting case study for you to take a look at. So just because you've closed out an alert doesn't mean that you give up on it, take it off your radar screen. Yeah, keep an eye on it. You never know when you might get a second entry. Hope you found that informative. Look forward to talking to you again next time. Take care, everybody.